if somebody believes that it's going to be possible for an AI-driven algorithm to very precisely say where a share price is going to be in 12 months' time, I would be astonished.
Hello, my name is Pinar Ozcan, and I'm a professor of entrepreneurship and innovation at Said Business School, University of Oxford. With me, I have Likhit, who used to lead financial services at IBM Global, and we are going to talk about the role of AI in financial services, and within that, the importance of data, data access, regulations, digital transformation, and of course, innovation. So let's jump right into it. Likhit, it's a pleasure to have you with me on this topic. And I wanted to start by asking you the role of AI. And, we've seen AI coming into our lives in many different aspects, but particularly in finance. Does it matter?
I think AI does matter, and I think it's going to matter a lot more for financial services going forward. There's been a tremendous amount in the press recently, particularly about generative AI, and I think that's still in its infancy. But if you look at AI in the form of particularly machine learning, it's been something which has been in financial services for quite a long time. Where I think the future is much more exciting, and this is as AI starts to develop, is how it could be used to provide better customer service to their clients and customers, how it can really be used to drive revenue growth within the banking industry. But I think exciting times lie ahead.
Absolutely. And in fact, at Oxford, one of the studies that we have, it really looks at the particular costs that can be reduced through AI in financial services. And we see that predictive AI can be great in training chatbots in many dialects in the world to make sure that even a farmer in a rural area who doesn't have access to bank services can talk to a chatbot and be understood in order to find the right financial services for them. Now, when we think about the use of AI, we, of course, can think about fintechs and some of the more innovative players, but there's also large players. So maybe let's tackle them one by one. What are some of the exciting uses of AI that you've seen coming from new entrants and from innovative players?
I think as far as the new entrants are concerned, they are really showing how AI could be used in order to truly improve the quality and breadth of experience that customers are being given. I think the point that you made about financial inclusion, I've seen several examples in India, for instance, where AI is enabling particularly the fintechs to offer some quite sophisticated things, you would think, into the rural community where people are not particularly illiterate. So I think, and going back to what I was saying right at the outset, that's a good example of how AI is driving revenue, because it's a completely new business that the banking and financial services industry is getting into. And what's very interesting is that it's the fintechs that are doing that much more than what the traditional banks are doing. I think going back again to what I was saying earlier on, the traditional banks are still very much in the realms of how can I use this to reduce my costs. I think they need to start thinking about how can I use this to improve experience and broaden what I'm providing to my customers.
In fact, and if you think about it, the larger financial services firms actually have a huge advantage in this game because they sit on top of so much data. And so can you tell us a little bit from your experiences working with large banks, how they think about data and whether that's changing?
Yeah, it is starting to change, and I think you're hitting there, Pinar, upon one of the problems. It's both it could very much be a massive asset for them, which is how everybody sees it. Exactly as you said, you've got all of this information, all of this data. On the other hand, it's a massive problem because the reason for that is most of the banks don't have this information organized in the kind of way that it needs to be. They also have not a lot around the provenance of this data. One of the things you need to be very careful about is you need to know where it's come from and whether it's data that you can actually use without issues for the sorts of things that you want to do. The banks are not in a position to really do that. So where, to give you an example, one of our clients was State Bank of India. What they have done is not so much rely on the information they've already got. because it's got the issues that I've mentioned. What they're actually doing is they're setting up new analytical models that underpin the transaction activity that their customers are involved with or likely to be involved with. They're drawing insights from that new data in order to then use AI to be able to provide additional services.
As banks start to think about how to use data and what data they can use and what data they'd rather not, of course, there's also the aspect of whether they'd like to look at this with partners that are more innovative versus not. What are some trends that you see in that aspect?
Traditionally, what they would have done was they would have had their data in what was essentially a central repository. They would have had like a chief data officer who would have been responsible on behalf of the group to manage that data. And ultimately, the governance would be very centralized. Whereas if you look at the more innovative organizations, what they're doing is they're making that process very much more democratic. So what they're actually doing is they're saying, look, any individual within the organization can actually develop the analytical model that you need in order to address the issue that that person is looking for. So it could be something in wealth management, where they're looking for a particular class of assets, whatever it is. They create the analytical model for that, and then they're able to draw in the pertinent and relevant data that's actually necessary to drive that particular model. But I think if I was to summarize, this is an aspect where, particularly if you look at the banks, and I would particularly look at the banks in the UK, have made very, very little use of this particular asset. They have this enormous asset. They've got ownership of the customer. I think we should talk a little bit about ownership of the customer, which I think is just as important. But they made very, very little use of it, and which is why you're finding that things like fintechs are coming in there to take advantage of that. You look at open banking, and how much revenue has been driven by open banking for a traditional bank, and I'd say not very much. But if you go out into Asia or Latin America, you will see a lot of the bigger banks have actually really taken advantage of open banking regulations.
So you and I have previously talked about how some of these institutions can learn from the East. And I'd love to go back to that and perhaps touch upon a few examples of more innovative banks in the way that they've leveraged data and AI. Can you give me some examples?
Yeah, I mean, I think at the very core of it, particularly if you look at the banks in the East, what they've been thinking about is to extend their horizons beyond just the financial services aspect. So if I give you one example, and this is SBI, who set up this platform called Yono. Now, Yono is a consumer platform, which, if you want to think about a parallel, is very similar to Amazon. But what they have actually done is they've used and it's more than AI. It's their customer. It's a number of customers that they've got. They've got 300 million plus customers that actively use the bank. What they're making available to those customers is access into consumer product companies that are right at the top of their brand. So if you're talking about cars, it's Mercedes. If you're talking about jewelry, it's Tanishq, which is the number one brand of jewelry within the country. And what they've then done is they have provided deals for the customer, which if they go from SBI to, say, Tanishq, gets them a much better price than if they were to go to Tanishq directly. That's then resulted in them being able to add 18 million new customers within 12 months. I don't think there's another bank around the world that has achieved that level of customer acquisition. Those guys are spending a lot of money, because you only get the discount if you use an SBI product. So it drives SBI Financial Services income for them. So it's driving a lot of revenue for the bank as well. Where AI comes in is they're underpinning this platform with analytical models. And they're using AI to look at the behaviors that the customer is exhibiting, and then using insights from those behaviors to drive additional financial services products that could be provided to that particular customer. And I think what this is moving, it's an interesting paradigm shift in the banking industry. I mean, in the past, people used to talk about, can I predict what is going to be a life event? Now you're getting much more into, being present at the point when the person's making the decision, not so much prediction, right? So if you see the person is looking to buy a TV, You come in with insurance to support that TV, or you come in with a loan to support that TV, interest-free or whatever it is, at the point of purchase, because that's when the consumer is most likely to take the decision to avail themselves of that financial services product. So it's kind of changing, making it much more real time than it ever was before.
Fantastic. There are a couple of thoughts that came to my mind. I mean, this example of SBI is very much a shift from a product and owning the customer mentality to a platform mentality, where you start to be a matchmaker between your customer base and third parties that might want to connect with them. And of course, as you try to do that more and more and look for financial products that make sense in that particular connection, then you're also bringing finance to a much more embedded finance situation, where these financial products start to be embedded in education, in transportation, in health and fitness, and many other services where they make sense. And perhaps they're even generated at that moment through Gen AI based on my characteristics and the characteristics of the trip I want to.
Exactly. And just picking up on the point around, because I think this is also quite critical for banks, right? Picking up on the point on embedded finance. Now, embedded finance, again, is becoming a big thing over here, exactly like you said, which is, and again, a good example of that would be, when you pay in Amazon, you can actually pay using an Amazon credit card, which is being provided for them, used to be by Goldman Sachs. So Goldman's and even Citi before them have found that this is no longer a money-making, as in a profitable enterprise for them. It's a race down to commodity. They are having to take all the risk. They're having to bear all the regulation. They're having to do all the kind of operations necessary to make that transaction happen. And, the Amazons or the Apples or the others are actually getting the margin. Whereas if you go to embedded finance in the kind of way that we were describing around SBI, and I'll come back to a DBS example as well, there the platform is being orchestrated by the bank. It's a change in mindset, because the bank is thinking, well, I own the customer. I'm going to orchestrate this particular platform, and I'm going to bring into the ecosystem other players that are required in order to make the embedded finance thing work. But because I'm orchestrating it, I still retain ownership of the customer, and I then don't race down to commodity in the kind of way that's happened with some of these other examples.
So basically, I own the data and I adjust the platform based on the way that I'm constantly monitoring and understanding the customer. Brings the value.
Exactly. They're keeping control of the customer. They are driving revenue for their own products. Huge customer satisfaction, because like I say, one platform from which things can be done, lots of convenience. So it kind of drives customer stickiness as well. I mean, the number of customers that you would actually lose because they're fickle and they're going from place to place in order to get the best deal. Also, there's a lot of evidence of that kind of reduces very substantially.
Exactly. And all of those relationships that you enable for the customer become the willingness to pay for the customer. Perhaps if it were just financial services, they could have gone somewhere else. But all of these relationships keep the customer engaged. And in order to do that, of course, you need perhaps two main things. The first one, a large customer base that you can offer to the rest of the world. But the second one is a focus on data analytics and understanding of data as a driver for new products and services, which is really something that some of the banks are lacking.
Absolutely. And from a mindset perspective, there are two or three things that they need to do very, very differently. I mean, most importantly, they think about the issue and the problem that the client is trying to solve or address. I think the second piece is the whole aspect around risk. So a number of senior banking executives, when you talk to them about these ecosystem platforms, will always push back and they say, I don't want to be involved in something where I'm going to be taking a risk about something that I don't understand. And then I think the third aspect, which is quite critical, and I really noticed this much more in the West as opposed to out in the East, is banking businesses, and fintechs are profiting from this a lot as well, are very, very siloed. So you just take a simple, that simple example. If you try to do that with a UK bank, the problem you would have is the core lending business does not talk to the payments business, does not talk to the regulation business. So, they'll kind of sit there and they'll say, well, who is going to drive this particular aspect.
If you look at banks, they've been in this business for many decades, and the focus has for many of these decades has been on compliance, building silos and handling everything according to its particular compliance requirements is one of the effective ways to do it.
Indeed.
Now, suddenly, of course, we're looking at it and saying, why isn't a bank thinking like Amazon? Well, Amazon has been subject to much lighter set of regulations compared to banks. So in a sense, it's a bit of an unfair comparison. So perhaps as one of the last things to discuss, I'd love to take your view on the increasing presence of big tech in financial services and whether you think these big tech players are going to constitute threats to traditional banks.
I mean, they already have been. So what big tech has been doing is it's very smart. It's getting involved in those aspects of financial services which actually are not regulated particularly high. So they're not taking deposits. They're in payments. Now, payments has a certain amount of regulation, but it's considerably less onerous than any of the other businesses. So they're getting involved in aspects of financial services where there are big margins, there are huge volumes. So you're not making money on large ticket sizes. You're making money on very low ticket sizes, but huge volumes. It's a little bit like telco economics being brought to financial services. So I do see big tech being a big threat. Now, I think the interesting angle, though, is, and just the example, right, in the US, Citibank and a number of other banks had decided that they were going to collaborate with Google. And then literally when they were on the verge of going live, it was pulled. Now, it's not clear why it was pulled. Anecdotally, the thing out there is that it was a lot of lobbying. So I don't know to what extent that lobbying is going to prevent big tech from entering, the Western markets. But certainly in other parts of the world where there are huge populations, a lot of money to be made, I think they are a massive threat. And fintechs are an aspect of that.
Exactly. And when we look at big tech, one of the first financial service that they went into, as you said, is payments. And payments gives them so much insight into the customer. One of my informants in a research project had told me, if you have somebody's payment data and their Google searches, you know everything about the person. Google searches gives you what they're thinking about. Payments gives you what they're spending their money on. And that's it.
Exactly.
And so it's not a surprise that there's so much competition in being the main payment provider.
Yeah.
And from there are so many services that you can offer, like Amazon is going into giving their sellers loans, which makes a lot of sense for them. So in a sense, to me, the big tech's increasing presence in finance is also a data play, a data hunt, a way to get to financial data and to combine it with the rest of what they know in order to strengthen their monetization models.
Yep. It is fundamentally that. I mean, you're absolutely right. And that just brings to mind, whilst it's not big tech, fintechs are operating in that space very effectively in the US. So if you look at a company called Stripe, or you look at Square, which is now called Block, I was fascinated with what they were doing in the restaurant business, right? So they started off as providing a payments capability for a restaurant, but they moved from there to, because they've got, like you say, they've got the payments data, they can see what cash is going in. They can also see what cash is going out because they can see what that restaurant is paying for. So they're moving forward and they're saying, look, we can offer you an end-to-end logistics service. That then goes on to say, oh, hey, it's the fallow season or whatever, bookings are down. We can see you're going to, have a bit of a cash flow crunch in a couple of weeks' time. We can even offer you money based on your ability to repay rather than standard kind of collateral in order to see you over that particular hump. And if you look at how many customers that they have got and what range of revenue that they're getting, it's a substantial amount of business. A traditional bank just never would be able to do that because their cost of acquiring that customer, looking after that customer, they're not really geared up for all of the reasons that we talked about in using the data that's necessary to provide the sort of service that Stripe is servicing. And they're handing all of that revenue over, to these small businesses.
Now, I wanted to also have some time in order to look at some questions which have been generated by AI for us.
Which is fascinating.
Which is fun. So shall we try to attempt to...
Indeed. Why don't we do that?
So the first one is, how does AI affect jobs within financial services?
So I think this is one where the jury is still out, because if you look at it so far, there has not been a particularly significant impact, certainly in terms of number of jobs. I think the worry will be, quite rightly, that as the banks and financial services companies start to use more and more AI to automate processes, they could automate a lot of software development as well, that there is going to be a substantial reduction in the number of jobs that they have. I think, like we were talking about earlier on, as the banks start to think about AI also from a revenue generation perspective and start to do some of the things that we were talking about in terms of these platforms, then I think that's going to create new jobs. But net, I'm not sure whether it's going to be a plus or a minus. I think the second aspect, though, again, not a lot being talked about in this space, but it's going to be truly important, is it is going to impact significantly the type of job and the type of capabilities individuals need. I mean, we already see this to some extent, right? I mean, I was fascinated the other day. I was talking to somebody who was very interested in getting into the banking industry, and she was saying, I've got this master's in finance degree and I want to go into investment banking. But if you actually look at who investment banks are recruiting, they're people with computer sciences and engineering and physics backgrounds. They're not, taking people anymore, particularly from economics and finance backgrounds. And I think that's going to become much more when you have AI. People will need to be able to program. People will need to be able to understand some of these languages and LLM models and things like that. So I think that is going to be substantially different as well.
Exactly, and I think that it puts a lot of pressure on educational institutions like Oxford to think about what the future of these jobs will be. Which actually brings me to my next question, which hopefully we can handle together. Yeah. What ethical considerations arise with AI in finance? So one of the things that I see, in my work at the Bank of England and with the FCA is that there are a lot of considerations around AI in terms of amplifying biases that exist in financial services. So, for instance, if in the past, some of the parts of population that haven't had access to loans or to, for example, we know that female entrepreneurs and entrepreneurs of color actually are much less likely to get venture capital for their businesses. And some of these biases could really be amplified when it comes to AI learning from data and then replicating. So AI models that detect an unbiased data will be extremely important to think about. And of course, then the other issue is data sharing. To what extent will I be disadvantaged if I am someone who doesn't like to share their data? These will be some of the ethical questions that we need to answer. And in my opinion, the only way to answer will be through regulation. What do you think?
But I know I agree with you completely, Pinar, and I think this is an area which is fraught with quite a lot of difficulty, because in addition to all of the things you mentioned, there's so much around the kind of fake news which is around and deep fakes and things like that, which is making it very complicated as well. I think the other aspect of it too, which we should be very aware of, is it does hallucinate. And therefore, to turn around and say, and we've seen in the UK the kind of post office example, right, which really had nothing to do with AI, but that was where there was this kind of view the computer is always right and we can trust the computer. Well, I'm not sure you're going to be able to do that for a very, very long period of time, right? So there are going to have to be checks and balances to make sure that what's actually coming out from some of these AI algorithms make sense, are accurate. Before people start to use them. So I think this is not going to be straightforward.
No, not at all.
By any means. Now this is an interesting one actually, which is and then this is moving on from regulation, Pinar. It's saying, can AI accurately predict fluctuations in the stock market?
So if we think about this, fluctuations in the stock market will take into account both human behavior as well as external shocks, environmental shocks to the system. And the ability of AI to predict that will be, I think that to a certain extent it will be able to, but at the same time, as AI starts to predict human behavior, and as that starts to interact with AI, we will get into a very endogenous situation.
Yes, indeed.
What do you think?
No, I think that's absolutely right. I think it'll be, because it's driven by human behavior, and human behavior is so incredibly uncertain. The probability of an AI-enabled analyst as opposed to AI on its own, an AI-enabled analyst having, a better view of what's going to happen in the future is certainly going to be the case, I think. If somebody believes that it's going to be possible for an AI-driven algorithm to very precisely say where a share price is going to be in 12 months' time, I'd be astonished if that happened, because human behavior changes and is going to, probably prevent something like that happening. But personally, the opportunity that I'm most excited about with AI is, if you look at it from a financial services perspective, right? Wealth management, I think, is a very underserved component. I mean, you just look at the UK for an example. Most UK pensions are now moving into direct contribution schemes, which means that, the average individual is going to be subject to vagaries within the stock market in terms of whether they have an adequate pension or they don't have an adequate pension. They are abdicating those decisions completely to essentially the big kind of asset management companies. And I'm not sure many people quite understand what is actually going on. For a traditional bank to be able to provide capabilities around all of those things, when they go at it in a very conventional way with investment managers and relationship bankers, it's just too expensive, right? Whereas they're able to use an AI type of capability and turbocharge some of these robo-advisory capabilities which were out there, you can start to see how a bank or a financial fintech organization could start to provide wealth management comprehensively to the average person within the UK. Now, you then just look at that for countries with huge populations, right? Like India or Indonesia or others. I think that's an opportunity to make a lot of money for these folks, because you're not charging big ticket sizes, you're charging small amounts, but you've got a huge population to deal with, right?
In fact, a few years ago, I had seen a statistic that had astonished me, which was that only the top 1% of the income bracket on average gets free financial advice, which is exactly the wrong way then compared to what it should be, right?
Exactly.
And so if AI is enabling us to reduce costs and to include people in financial services and to educate them at a much lower cost, then we are going to see many great opportunities.
Indeed.
Likhit, thank you so much for sharing your thoughts with me. It's a pleasure as always. As you can see, there's so much to discuss when it comes to the opportunities and some of the limitations of AI in finance. We will see some great innovations and hopefully some great applications of AI in terms of financial inclusion and embedded finance. But there's also a lot to think about when it comes to biases and other ethical considerations, especially for regulators. So please watch this space and watch our research at Oxford. Thank you.